Good morning, good afternoon, or good evening, based on the time which we are or you are opening this file. Kindly accept my greetings. So, we were studying cost and management accounting in semester 2. As I told you in the initial phase of this subject, it can be classified into two parts or it can be segregated into two parts. That is, the first part comprising of cost accounting and the techniques used in cost accounting. And the second part, that is management accounting and the techniques used in management accounting. So we have completed or we are completed with the first part of this subject, that is cost accounting. Now we are moving to the second part or second section of this subject, that is management accounting. So before going to detail with management accounting, let's have a recap of what we have studied till now with respect to the subject called accounting. So, as I told you in the first semester, accounting is basically classified into three subjects, that is financial accounting, cost accounting, and management accounting. So, till now we have studied the first two phases or first two types of accounting, that is financial accounting and cost accounting. So, in the initial phase of this chapter, I am trying to give a short briefing of these three types of accounting. So, what's financial accounting? Okay, let's think it in your mind. What is or what you have studied or you have learned with respect to financial accounting? Yes, financial accounting is basically the activity of recording the financial data or financial transactions which are happening in the business. Anything which is happening, which is having some monetary value, will get recorded in the books of accounts. So, what was the purpose of having this financial accounting? As we have learned in first semester, we are recording the transactions in journal, we are posting it to ledger, and we are preparing trial balance to test the arithmetical accuracy. And after that, we are preparing the final accounts, that is profit and loss account and balance sheet. The basic intention is to find out whether the organization is making profit or loss, or we have to find out the position of the business that is being facilitated with the help of balance sheet. Okay, so that is the main purpose of financial accounting. And in addition to the initial purpose or the basic purpose, financial accounting intends to understand the business trend, how my business is performing. Am I making profit? Or what is the trend of the profit that I am generating? And this kind of analysis or understanding will help the businessman to find out how the business is performing. So, but that is the basic intention, or that is the basic things which are associated with the branch of accounting called financial accounting. Now we are moving to the second type of accounting, that is cost accounting. It can be relatively recalled very easily. Why? Because you were studying this subject for the last few months. So, what was that? In cost accounting, we are trying to set cost for a product or services, or in a simple manner, we can say that we are determining how we can charge or how we can cost a particular product or service, what we are offering to the end consumers. So I told you the importance of price for a particular product in the first classes of this subject. So I'm not going into detail with that. Uh, in cost accounting, what we have done is that we have identified the different costs which are associated with each production activity or each activity of the organization. You have studied, kindly recall what we have studied: labor cost, material cost, indirect expenses. So all those costs which are associated with the activities of the organization has been identified, and we have summated all these costs, and we have added the profit margin, and thereby we have found out the cost which has to be charged from the consumers. So the basic intention was to determine the price which has to be charged from the end consumers. So that was all relating to cost accounting. Now we are moving to the area of concern for this chapter, that is management accounting. So in this module and the last module, that is in the fourth module and fifth module, we will be dealing with management accounting and the different tools which are used in management accounting. Even though we are not covering all the tools, we will be trying to touch the majority of the tools which are being used in management accounting. Okay, so what is management accounting? Before going to in-depth understanding of management accounting, let me give you a brief idea of what management accounting is. Actually, it's not a discipline in itself. So it's not an isolated area of study, which means that it does not have any separate identity. It is actually borrowing the information from financial accounting and cost accounting, and they are analyzing those informations which are produced from financial accounting and cost accounting to facilitate the managers in decision making. So the basic intention of management accounting is that they want to facilitate the decision making of the managers. Okay, so I hope you have got a rough idea of what management accounting is. For those who have not identified what management accounting is, let me simplify it furthermore. Management accounting is a kind of accounting which starts where financial accounting and cost accounting ends. We are simply and effectively utilizing the financial accounting and cost accounting information to make some meaningful information or meaningful output so that the management can take an informed decision so that they can improve their productivity or improve their course of action. So some input is being taken and an output is produced. I'm simplifying it furthermore. Some input is being taken, that is the input from financial accounts and cost account, and a platform is used, that is management accounting, and through that platform we are producing some output, that is the output which is derived out of management accounting. That output is being used by the managers for effectively taking some meaningful decisions or actions for the business unit. Okay, now we are going to see in detail what management accounting is one and what are its characters, features, and all. First, we are going to see the meaning of management accounting. If you are separating the term management accounting into two parts, that is management and accounting, you can easily understand what management accounting is. You have studied that management part in the first semester and accounting part also in the first semester, so you can easily identify and understand what's happening in management accounting. So in management, we are having the activities of planning, controlling, staffing, directing, and all those kind of activities, which is providing a direction to the management, which is controlling the activities, which is directing or controlling the activities of the organization. In accounting, we are recording or we are dealing with the monetary records or monetary activities. It's that simple. Management accounting is providing some accounting information to the managers for effectively planning, controlling, and thereby making good decisions for the organization. So it can simply say that, or we can simply say that management accounting is a study of the managerial aspect of the accounting. So as you have got a basic idea of what management accounting, we are going to see the definition of management accounting. Here I have taken two definitions which can or which have covered almost all the parts of management accounting. The first definition is being given by the Institute of Chartered Accountants of England, and the second one, which is giving a more meaningful idea of what management accounting is, and it is being given by T.G. Ross. So, first definition, that is the definition given by the Institute of Chartered Accountants of England, says that management accounting is any form of accounting which enables a business to be conducted more efficiently can be regarded as management accounting. So, I have highlighted the important part of the definition, that is any type of accounting. Management accounting is a type of accounting which enabling the business to be conducted more efficiently. Why or how it is happening? Why? Because the raw data which is available in financial accounting and cost accounting is being utilized in management accounting, and they are processing it to develop some meaningful output so that the management can take some meaningful decision which enables the business to be conducted in an efficiently or effective manner. But it does not cover the entire part of management accounting. So moving to the second definition, which is being given by T.G. Ross. Let me read it. Management accounting is the adaptation and analysis of accounting information and its diagnosis and explanation in such a way as to assist the management. So it have covered almost all part of management accounting or almost all the activities of management accounting, where we are, based on this definition, we can say that we are adapting and analyzing the accounting information and diagnosing or identifying and explaining the accounting information in such a way that it will be assisting the management in making an informed decision which will help the overall efficiency of the organization. So we are moving to the next slide.